Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 25th, 2018. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame. We continue to see trending behavior to the upside overall. You can see here that price has taken the better part of the year to get all the way back to the early January highs or late January highs. Since then, price has pushed through it, come back, and made the 28.78 half support, rallied, and continued higher. So this has been a very successful move higher so far off of that area. But at the moment, again, we could continue to see development of the zone up here. That previous month's high is very important. As we mentioned, 29.17 to 29.20. And any failure to hold that zone could open up at least a return back toward recent lows here at 28.65. At that point, there could be another opportunity to bring it back up. So again, that is an opportunity that could develop. So nothing says we have to continue higher here. Things have gotten a little overextended in the near term for the ES. And again, any failure to hold that line right there would open up a potential return back to the lower blue line here, 28.65, heading into next month. And again, that could be a great trap for a move back up if it were to happen. At the moment, bulls, at least in the near term, are trying to keep 29.17 bid for a continuation higher. That's the near-term story. If you start to see some rejection at the previous session's high, pretty hard rejection here today, that could be a tell. But again, expect the market to continue to coil up heading into Wednesday's FOMC meeting and the Fed interest rate decision, which will be our new FOMC key level, very similar to the key level we got in August 1st. Also June 13th, May 2nd, and down the line. So again, each and every one of these are very, very important. We're going to get another one Wednesday. All right, let's take a look here at the NQ. The NQ right now continues to compress and coil up. Again, this one appears poised for another squeeze. All it has to do now is squeeze. It has enough energy. It's got a bit of a rounded bottom here. Kind of an ascending wedge as well. Those typically break to the upside. We're at the lower edge of the bullish channel that's been developing, and again, that opens up the potential to see a rally. We were looking initially for a squeeze earlier in the month into 7,800 to 7,840. Right now, this as much energy that is built up now could squeeze even beyond that into 79 or beyond. So again, we have an inside value relationship that has developed heading into October with a narrow pivot range, and that is typically indicative of explosive breakout potential. If it's to the upside, we could get a pretty good move into 7,900. Any failure or a break to the downside, mainly through 74.40, any push through that level probably leads to more weakness back toward 7K. So again, we haven't seen a move of that magnitude in a long time, so I'm not expecting it this time around, but you always have to watch for the signs and the cues. The number one cue would be this thing were to break up strong and then reject hard. That would immediately suggest at least a return to break below these lows and perhaps grab 7,300. So again, that's the failure point. Right now, this appears poised for another squeeze heading into perhaps the next 2 to 3 weeks. Again, got to watch the 76.40s. All right, let's take a look right now at crude oil. Crude oil has been stealthily bullish. It has quietly pushed through each and every resistance level. It hasn't always looked the strongest, and it's done quite a bit of chop, but overall it has pushed beyond the 70 level, the 70 half, the 71s, and it's now pushed even beyond 72. I mentioned yesterday that this 72.31 is going to be a very interesting level. That's where we sold off before. Above there, tried to form acceptance and rejected. And so getting to that point again appears like, again, there's the potential, especially with a digestion day developing today, there's the potential to see a major failure and a pushback. It doesn't take long for price to drop from that area. At the same time, we are at the edge, at the LVN. Acceptance in this zone leaves no other choice but to retest recent highs at 75. So we are at the main pivot right now, 72.30 again, just like we were yesterday. We're forming an absorption day here, and the key level here to watch for today for signs of a failure would be the previous session's mid, so 71.94s. Basically, that's the low of the day. The low of the day is 72.02. So basically, we could continue to see a fade the edges type of day intraday, but any failure to hold that level could open up more of a pullback. Holding above that level suggests more of a continuation. Higher highs and higher lows day over day. 75s could be in view. Again, this is the pivot that's going to decide, do we go here or do we rotate back down towards 70? All right, let's take a look at the last one here, which is gold. Gold continues to compress significantly. We've talked about the 20-day range compression for this one. Again, this one is compressing heading into the FOMC key level this Wednesday, which will be tomorrow. And then from there, we're likely going to see a big move. Let's put this in perspective. The last time this happened, where we had a major compression heading into the June 13th meeting. That's the FOMC key level for June 13th. It starts on that day. That's the day. Here's June 13th. The level is 1301. 60, you can see how price had compressed for the 20 days heading into it. That's the day it happened, this one. The next day it tried to break to the upside and failed. The day after that, stop run day down, and we completely sold off to the downside. We are setting up for the exact same move right now, or potential move one way or another. Again, it's always the failed breakout that can trigger the move in the opposite direction. So as we head into the FOMC date tomorrow, remember, do we break up first? Because if so, if there's a rejection there, watch for this type of move with this type of stop run day coming, because a stop run day here would take you way down in a day or two, and then from there you could see a significant continuation. Likewise, a first break to the downside and failure could suggest a downside failure and downside failed range expansion. That could lead to an upside break through 1220 and a continuation back up. We have at least till 1260 and perhaps even all the way back to value ahead. Again, I would caution, gold has not seen a bid in a very, very, very long time. So it has to prove it to the upside for me to believe it a little more than the downside move. So I'll be watching for signs of rejection that could signal a major sell-off ahead. So again, gold coiling up ahead of the FOMC key level tomorrow. That could lead to a major breakout move very, very soon. All right, that is it for now. Let's see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room.